channel. This session we'll be looking at the general lending process. Basically, you understand that in these modern days you have to do business on credit. Here we're going to focus on the credit process, on the general lending process between borrowers and financial institutions. We're going to look at the main steps or the main processes involved. We initiate the lending process where we have the origination, and at the level of the origination phase, a bank actually contacts a potential borrower, offering to grant them a credit, or a borrower actually contacts a bank requesting them to grant them a credit facility or a loan. Once the origination process is complete, we have the second phase, which is the negotiation. The lender or the financial institution goes into a negotiation process with the borrower. They try to discuss the nature of the loan or the nature of the facility that the borrower is interested. That is looking at the amount of the loan, the rate of interest, the type of loan that they want to take, and then at this phase the borrower can then submit application for the loan. Now, after the negotiation, the next phase will be the underwriting process, and at the level of the underwriting process, the bank will be assessing and analyzing the credit worthiness of the borrower to ascertain whether they will be able to repay the principal and the interest of the loan if it is actually granted to them. So the credit analyst with the bank at this level does a critical analysis to be able to ascertain whether the customer is credit worthy for them to grant that borrower the loan or not. And after the underwriting process, the next process is what we call a documentation. At the level of the documentation process, documents are prepared for the borrower to sign, incorporating all the necessary supportings as per the requirements of the banks, the ID cards, and any other documentation, or maybe employment contract or things like that, depending on the situation or depending on the requirements of the bank. At this level, the bank is going to design an agreement that coexists between the bank or the financial institution and the borrower. And after the documentation process, we have closing, booking, and funding. Now, at this level, once the documentation has been signed, the funds are transferred, the loan is approved, and then the financial institution transfers the funds into the accounts of the borrower. The credit analyst now continues to monitor the loan, the books of the borrower, to ascertain and know whether the borrower is paying the principal as well as the interest on a monthly basis, depending on the terms and conditions that have been arrived. Kindly subscribe to our YouTube channel, as we'll be detailing more details on how to obtain credit, the various types of credit, the cheapest sources of obtaining credit, or whether it's cash, whether it's through selling shares or things like that. So basically, we'll be focusing on our next lecture on explaining on possible ways and the best and cheapest facilities or loans or credit facilities which are offered by banks, depending whether they are fixed or variable. We'll be discussing that in our next video. Thanks.